Hello everyone, and the important news on the day is that, like Elon Musk asked his following should he sell his Tesla stock, I'm asking should I have a haircut? So to my millions of followers out there, if you think I should have a haircut, let me know and I'll have a haircut for you. It's not something I was planning to do anyway. Moving right along, in the US on Friday we saw consumer confidence continue to tank. It's already at, pandemic, below the previous pandemic lows. It's already at GFC levels and it continues to weaken. US consumer in trouble means US economy in trouble. Today in China we got PMI, official PMI data. Forget that Caixin survey stuff, that's mostly just exporters. We've got official PMI data in China. Manufacturing services both depressed. Manufacturing 50.1, services 51. It is a Chinese economy treading water, just trying to keep its head above the water. It's not a strong economy. We all know why. We're having lockdowns for COVID and we're having shutdowns of power to reduce pollution ahead of the Olympics. So that's going to remain the state. What's going to be of interest is how much the Chinese economy rebounds after the Olympics. Speaking about the after the Olympics, a friend of mine, Peter, today, he suggested that Putin might wait until after the Olympics. I mean, that made a lot of sense to me instantly. China's their number one ally at the moment, virtually, well, perhaps, maybe, and certainly they wouldn't want to upset that experience for China. It also ties in with the ground freezing over. So I don't know if you saw Monty Python many years ago, but there used to be a joke, no one expects a war. No one expects a war. Be careful, there could be a war. The US response to Russia's requirements, I think Russia sent a list of 12 things it would like to have happen to have a sense of security in the region. And basically the US said no to all 12, or however many there were. And also over the weekend, the commentary has intensified, saying Ukraine can join NATO whenever it wants. In case you're wondering why I'm doing that, to try and keep the sound out of the mic, the wind out of the mic. Ukraine can join NATO whenever it wants, is the US response. This is entirely the reason Putin is massing troops on the border. It's exactly what the United States would do if Mexico was threatening to join the USSR. You would see the US move troops to the border with Mexico. So we have to understand, not from a Western perspective, we have to understand from a Russian, Eastern European perspective, that war is more likely than perhaps we in the West imagine, given that we think it's just a simple case of an independent state being bullied by a big one. No, we've seen all superpowers look to buffer their own regions around them with like-minded governments. This is what Russia is doing, or asking. It's asking that Ukraine not join NATO, ever. I mean, it's a big ask, but also it's a solution to the risk scenarios and the fears that many Russians might have. And it might have some merits. I'm not saying Ukraine should. There's a lot of arguments the other way as well, but I'm just trying to put it into perspective. It's not as simple a case as maybe we're reading and seeing in our media all the time. And really what I'm trying to say is that's why there could actually be a conflict. Also, the longer Putin leaves it now, the more military equipment Britain and US, for instance, are going to push into Ukraine. But to give you an idea how much sort of confusion there is within Europe, or debate within Europe about all of this, is they don't want Russia pressuring Ukraine. They might be happy for Ukraine to join NATO at some point, but they also to some degree see the Russian perspective. And this is why, for its military aid to Ukraine, Germany sent 5,000 helmets. That's it, 5,000 helmets. So that gives you an idea about how involved the Germans want to be in this. So there are differences of opinion within Europe. Now, there isn't going to be a conflict between the US and the USSR over the USSR, showing my age, between the US and Russia over this. There isn't going to be a direct military conflict, but there is going to be heavy sanctions on Russia, and Russia might see that as simply the price to pay to have its strategic regional security in the same way that China looks to do it, The United States has always done it, and other superpowers throughout history have done. I'm not saying it's right, I'm just saying that's how the world works, that's the way of it. And that's why the risk of war is higher than most people anticipate. But anyway, as I was saying, economic data, manufacturing, slowing, US consumer confidence, it's all around the world. I'm worried about, it's not actually all, because the UK is doing better, parts of Europe are doing okay, but for the United States and China, the world's two largest economies, there is slowing manufacturing pressures, and there is consumer confidence starting to wane. We had some data out of Japan today. Industrial production fell again. So it had a super month the month before in November. So it might just be a kind of averaging out of the 2 months. But it was contracting again, industrial production in Japan in December. Retail sales were up 1.4% in Japan, and that's a reasonable number. So Japan is gaining traction. That is good. When it comes to markets, what we're seeing is they've just fallen too far, too quickly, and so there's so many traders out there who are trying to contrarian trade now and looking for the rally, for the bounce, and doing a lot of buying. We're seeing that across all equities, and we're seeing it in the euro and the Australian dollar specifically as well. So as I said on Thursday, I think I started saying it's time for a bounce in the US market. But will that bounce be particularly powerful? It was a good bounce on Friday in US stock trading. Market managed to close on its highs, but it didn't break the recent range of the last sort of 3 to 4 or 5 days. So it's really a bit of a heavy consolidation pattern if you stand back a little bit rather than just being too up close to it. So I think there is room for some strength today in New York, but if it isn't incredibly impulsive and powerful and convincing, the rest of the week could see a resumption of quite significant selling pressures. I mean, the news that came out over the weekend, remember I was saying last week that the Fed could hike by 50 points and no one else had really picked that up in the conversation as much as I had out of Powell answering questions after the FOMC. I said he didn't rule out 50-point rate hikes. No one else picked it up, and when I put that out, a lot of people thought, oh, that's not going to happen. And yet, a Fed president came out over the weekend and said 50-point rate hikes are a possibility. There you go. All right. And the other thing that came out over the weekend is that the US rejected all of Russia's requests. So they're quite negative. So it depends how the market in Europe and New York feel about those developments going into Monday trading. They might be just a little bit cautious. But again, there's a lot of people who managed to get short like we did, who are looking to take some profits. I'm actually looking for a bounce to add to shorts, a little bit different to the market. But so there is buying pressure buying interest on the day, but there's a couple of fundamental things happening, and the idea that no one expects a war, but what if? Apparently, Russia moved even more troops to the border over the weekend, so that's ongoing. I saw some actual footage on the border from the Russian side. All their tanks are lined up ready for war with their engines running 24/7, with troops ready, out in the open 24/7. So they'll be doing a rotation of tanks and troops, but they're always at the ready. You can't get more intimidating a force than that. Just the footage of all these huge tanks. And the thing people don't understand about Russia, this will be their best troops, their best 6, or it might end up being 7, but at the moment their best 6 battle groups with their latest equipment and technology. And if you've seen a latest Russian destroyer lately or anything, or their latest fighter jets, the Russians are right at the edge of the curve in terms of the technology of the weaponry they have. And I'm not saying this to promote Russia. I'm not taking Russia's side. I'm just trying to explain to everyone that war is a possibility. It's not something like, a skirmish with South Korea that will go away. Hopefully it is that, but you can't be sure of that. So just be a little bit careful, because if anything happens in the next 2 to 4 weeks, or after the Olympics after the Olympics in China, if anything happens in that time period, stocks could really fall quite sharply. It might be a reason to be buying now because you can't see anything happening before the Olympics, because why would Putin want to offend the Chinese by starting a war during the Olympic Games? Not a good look. So there you have it. That's my take for now. I hope you have a really great week ahead. It's going to be interesting markets, that's for sure. I put out a written piece on the RBA, but what they should do tomorrow is raise rates 0.5%, like that. End all bond buying like that, as I've been saying for months. And they should be at 2.5% by the end of the year. They'll probably, but that's what they should do. Now this is what they'll probably do. We're going to end bond buying program. We're going to perhaps be raising interest rates earlier than first thought. We do not expect inflation to be anything but transitory, so we're not rushing into it. Now, if they say all that sort of stuff, it's still a sell stocks, because it means you still have massive mismanagement of the economy and monetary settings by our reverse Bank of Australia. That's all from me, Clifford Bennett, Chief Economist, ACY Securities. As I said, have a fantastic week. Thank you.